Guys, you already know that 2021 has been a crazy year to be an investor in Chinese stocks. Alibaba, one of my favorite stocks, started the year at approximately $271 per share and went as low as $158 per share, a 40% drop so far year to date. Now, I've been very vocal that the share price decline for some of these Chinese stocks has been overdone. You've basically been throwing the baby out with the bathwater. And I also put my money where my mouth is, where I made a six-figure investment into Alibaba, and I'm planning on doubling down if these shares go under $120 a share. That's how much I believe in this opportunity. And it looks like I'm not the only one that's doubling down here. Super investor MONISH PABRAI added 53% to his position in the second quarter of 2021. So why exactly do I think MONISH PABRAI doubled down on this stock during the share price decline? That will be the focus of this video, plus an overview of Alibaba's Q1 2021 results. You're watching More Money? Let's get it. What's up, guys? Tay here. You're watching the #1 channel on YouTube for people that want to retire early. I truly believe that I provide some of the best due diligence on investments here on YouTube, so I'm glad that you've decided to join me. Now, you guys may recall, I'm not one who's really influenced by super investors. I don't watch what they're investing in primarily because I don't want to build a cognitive bias towards any company. It's a different story after I've made my position, however. I love to see who else is buying that stock to see what the shareholding base looks like. And as you guys already know, Baba is not short of any super investors. Charlie Munger is an investor, so is MONISH PABRAI, and from here you can see that Bill Miller and Tweety Brown added on the weakness during the quarter. So the stock is becoming crowded with value investors, which is a good thing, but I need to remind myself that this is not a shortcut to not doing the homework. The way I'll lay out this video is by first going over Baba's Q1 results and then going over the major reasons why I believe MONISH PABRAI has been so aggressive on the stock. And of course, there's one investment that you can make that's even better than investing in Baba, and that's by investing in the like button. It pays huge dividends by letting YouTube know that this channel provides valuable content, and thus they'll share with more viewers like yourself. Okay, let's get into it. So Baba reported Q1 2021 results. And as you can see, their revenue is up huge at 34% over Q1 of 2020. But despite the massive increase in revenue, net income and free cash flow are actually down quarter over quarter. And you can see from here that what's driving that reduction is largely their core commerce segment. Revenue's up 35% to 180 billion RMB from 133 billion a year ago, yet adjusted EBITDA is down almost 6 billion. So revenue's up primarily due to the continued growth of the online physical goods gross market value on their China retail marketplaces. That growth also reflected new monetization formats such as recommendation feeds and an increase in pricing per clicks in search. They went on to explain that the lower EBITDA in commerce is lower because they've made investments into key strategic areas. If you adjust for that, EBITDA is actually up 6%. You might be asking, what exactly were those key strategic areas? Here you can see that they mentioned that the slower year-over-year growth was primarily due to spending on growth initiatives within the China retail marketplaces, such as Idlefish, Taobao Live, and additional support to merchants. What I'd like to point out is that business is firing at all cylinders. Taobao, Grocery, and Fresh Hippo, two areas that I'm very bullish on, are showing quarter over quarter growth of 200% in gross market value. Elle.me and Lazada are also seeing massive increases. The one area that I was a little bit worried about was Lazada, so it's really good to see their 90% year over year growth. You're gonna hear a lot of analysts and even YouTubers talk about how Baba is good domestically, but not necessarily internationally. So Lazada excelling can show that Baba can really get it done internationally as well. If you recall, Lazada is Baba's international expansion platform into Southeast Asia, including Indonesia, Vietnam, Malaysia, Thailand, Singapore, and the Philippines. So I'm not as bearish as most people are on Baba's international expansions. I think internationally, Baba will be just fine. Annual active customers of the Alibaba ecosystem across the world reached approximately 1.2 billion for the 12 months ended June 30th, 2021, which is an increase of approximately 4% or 45 million from the 12 months ended in March 31st of 2021. Now, obviously, this is mostly in China. This includes 912 million customers in China and 265 million customers overseas served by Lazada, AliExpress, Tendol, and Duraz. And also the big item that everyone is looking out for, you can see from here that cloud computing grew at a rate of 30% and remains profitable. This is a big growth segment for the company and it's humming along nicely. As you guys can recall from the Google segment, Alibaba and Google's cloud computing businesses are relatively the same size, but Google, as mighty as they are, has not made that segment profitable yet. So it's really good to see that Alibaba is now profitable. It's their second quarter in a row. And like I said to you, cloud computing in China is a once in a lifetime opportunity. I really think once people start giving Alibaba credit for their cloud computing market share and business growth, this stock will skyrocket upwards because you're going to be forced to reflect the value of the company. Finally, guys, Baba is expanding their share repurchase program from approximately $10 billion US to $15 billion US. That's a 50% increase. And these guys mean business as they have repurchased approximately $3.3 billion of their ADSs since April 1st of 2021. Now, how material is this? Well, this repurchase authorization of approximately $15 billion on the current market cap of $465 billion reflects approximately 3% of the shares outstanding. So it's not nothing. As the share price continues to decline, this will obviously reflect a higher and higher percentage of the total share base. Now, I'll leave it to you to dive deeper into the key segments if you wish, but overall, it's obvious that the business is humming along just fine. So now I wanted to go into some of that super investor behavior. So why do I think Monish Pabrai bought more shares in Alibaba? Why did he double down and increase his holdings by 50%? Now, you guys already know, I do not look at super investor behavior to validate my purchases of a company. However, when super investors do come into a company that I'm invested in, I always like to think about why they're investing in it. And I think there's 4 major reasons why Baba has been such a compelling opportunity for Monish Pabrai. The first reason, of course, is that with Baba being sub $200 a share, we are now entering ultra deep value territory. To put that into perspective, approximately $40 per share of the valuation is just cash and equity securities / investments on the balance sheet. So at the very minimum, the share price needs to reflect $40 a share without taking into account Alibaba's business operations. So if the business is selling at approximately $150 a share, like it was last week, we can easily subtract that cash and investments out and be left with approximately $100 per share for a business that's easily worth between $300 and $600 per share today. So that deep value is extremely compelling. The second reason why I believe Monish is doubling down on this opportunity is the fact that a large beneficiary of the emergence of the Chinese middle class is Alibaba. This growth story is very, very real. The lower middle class and above classes of people are expected to explode by 2030. This means that the spending in China by the average customer is expected to start matching that of the rest of the world, which of course means more consumption. It also means that more and more people will log onto the internet for the very first time, as China has a low internet penetration rate at only 68.5%. So as these people log onto the internet, growth of consumption on the Alibaba platforms is inevitably going to increase. And this consumption is expected to be across the Alibaba platform with multiple touch points, as Baba is involved with online malls, community marketplaces for secondhand goods, local delivery, grocery, and quick service, to name a few of their many, many business offerings. The third reason why I believe Monish Pabrai is bullish on Baba is because I believe Baba's biggest opportunity is being overlooked, which is cloud computing, which is ironic because I believe it's the same reason why Alphabet is getting a premium valuation right now. Cloud computing in China is in its infancy and it's growing fast. Baba is a leader in this space and already profitable. And once again, to put that into perspective, Alphabet is a similar size and not yet profitable. Finally, the fourth and last reason why I believe Monish Pabrai doubled down on Alibaba is because I believe that another business is being overlooked, which is the China Logistics Network. I am very excited about this business, and I bet you Monish is as well. The logistics network has been growing at incredible rates, and even in Q1 2021, they delivered solid revenue growth of 50% year over year. I honestly might have to revise my forecast upwards, as this thing is growing at over 50% a year, and I'm forecasting at approximately 30%. I actually don't think I'm gonna revise my forecast, but just to put into perspective that it's outdoing my expectation, which I already thought was pretty high, by 20%. And of course, in addition to those 4 reasons, we also have the 5th and biggest item, which is Ant Group. Because of recent issues, I took no risks here and valued the company at virtually nothing. This, of course, is not going to be the case, and so this is a huge upside to my valuation, and I'm sure Manish is betting on value creation from this as well. Let's just do the simple math here. If Baba has a market cap of $465 billion today, and at one point Ant Group was being valued as high as $300 billion as shown here, how much upside do we really have post the regulatory fixes? Even if the IPO is done at approximately $100 to $150 billion, we have some massive upside here. So this is a real catalyst. Now, are there potential challenges on the horizon? You bet there are. No business is immune from challenges. The one piece of news that I could see that would directly impact Baba's future growth prospects is the July 4% online shopping growth rate. This is down from an average of 21% over the past 5 years. Now, if this is prolonged, it could absolutely have an impact. Do I believe that it's a sustainable slowdown? Well, in order to believe that, I would have to believe that the Chinese middle class's emergence is complete, and that would be foolish, so I can't conclude that at all. My thesis remains the same, and you can download my Baba model from the description below. At the end of the day, I have to reiterate, investing is about having the courage to focus on the soundness of the company when the share price is declining below your purchase price. Before I buy any company, I ask myself, what will I do if the share price declines by 90% tomorrow? If the answer to that is buy more, I buy the heck out of that company. This is why my due diligence is so detailed and so strong. This is why I build models and go through the Buffett 4-step process. It's also why I'm fortunate enough to have reached my retirement goal in my 30s. I hope you guys got some real value from this video, and I'll see you later.